Supply and demand is one of the oldest trading strategies that still work till today. That's why in this particular video, I'm going to take my time and then share with you a step-by-step guide on how you can identify high quality supply and demand levels and how you can trade them profitably. So without taking much of your time, hello guys, welcome to my channel. And on this channel, I mainly focus on creating trading videos alone. So if you think you need more trading videos like this and you want to watch more and grow as a trader, then consider smashing on that subscribe button, and also don't forget to join my Telegram channel, whose link will be down in this video description. So without taking much of your time, let's get straight on my computer. Let me share with you a step-by-step guide on identify high quality supply and demand levels and how you can also look for entry opportunities within those supply and demand levels. So hello guys, now that we're on my computer, I'm going to take you straight and share with you every single thing you need to know to identify high quality supply and demand levels and how you can also trade them profitably. Now when it comes to identifying supply and demand levels, the first thing you actually need to do is that you need to first of all understand the time frame you'll be using. That's why in this particular video, I'm going to break this video into two sessions. The first session will be about identifying supply and demand levels, and then the second session we are actually going to do a little back testing on it. Like personally, I've been doing some back testing recently, and I'll save all of them here. You can see I use Notion notepad to actually save all my back testing. You can see I've done 1 2 3 4 5, so out of 5 I lost one, which is fair enough. So I'm also going to do a little back testing with it so you see it. So the first session of this video, we are going to focus more on identifying these levels. Now when it comes to identifying supply and demand levels in the market, the first thing you need to be cautious about is the market direction. Now why is the market direction important? The market direction allows you to know which area to focus on. Like when you see some beginners mark out their supply and demand level in the same trade, they can mark out the upside and also mark out the lower side without knowing where exactly the market is going. So when the market breaks above the higher side, they tend to blame the market movement for manipulation or something. So when it comes to identifying your supply and demand levels, the first thing I would advise to do is that look at the market direction. If the market is going to the upside, then channel more attention to identifying just demand levels. If the market is going to the downside, focus more attention on only focusing on looking for supply levels. So now with that aside, now the next thing you need to put in mind whenever identifying supply and demand areas in the market is that your time frame should determine what you look for. So for example, if you are looking for your entry on the 15-minute like me, then the best time frame to identify your supply and demand levels is the 1 hour time frame or the 4 hour time frame. The reason why these time frames are the best is simply for you depending on how you are trading, is because when you identify them on the 1 hour time frame, you can get a good entry on the 15-minute time frame, and vice versa. If I identify it on the 4 hour time frame, the 1 hour time frame or 30-minute time frame will be the best time frame for me to get my entry opportunity. And now for those of you who want to trade it on the lower time frame as well, it's also good for you to trade it on the lower time frame. Like it literally works on every single time frame. But then the lower time frame, if you want to get your entry on the 5 minutes, then draw your power moves on the 15 minutes. The reason why I'm saying all of this is that I've backtested it across various time frames and it works across all the time frame. But then identifying on the 1 hour, looking for entry on the 5 minutes is quite trickish. That's why I advise, if you identify them on the 1 hour time frame, trade them on the 15 minutes. So with that already said, now let's get into the main identifying of the supply and demand levels. So now here is our chart right now. Here's a chart between GBP and USD, Great Britain pounds, and the US dollar, which is a pair I hardly think of trading. You can see it's not even on my watch list, so I hardly trade this particular pair. So now let's take a look at the market right now. Now when it comes to identifying supply and demand level, the first thing is pick out your time frame. So I'm someone who look for my entry most of the times on the 15-minute time frame, so I will be identifying my supply and demand levels on the 1 hour time frame. Now take a look at this market right now. When it comes to identifying your supply and demand levels, only identify places whereby the market made decisive moves or power move, as some people might say it. So for example, let's take a look at this particular area here. Take a look at this market. Now when looking at this market right now, the first thing you can look at for here is that you have what? You have a clear area of demand here. This whole area is an area of demand. The whole of this area is an area of demand, as you can see. So the whole of this area is, this whole area here is an area of demand, and as you can see carefully, when the market came back, I said the market is literally bouncing back off it again. So now you have this area as an area of demand. So let me assume this other side did not exist, so we will only have it an area of demand at this point here. Now you can see when the market came in, what you see, when the market bounced off here, it made a power move. So this power move made this place qualify as a good area of demand that you can patiently wait for the market to fall back into. And whenever the market fall back into it, it will be fair enough for you to actually get a buy position. And now apart from here, let's identify an area of supply as well. This higher area here is another good area of supply. Why is it a good area of supply? Because when the market came in here, you can see immediately the market fall off again. This also made this one a good area of supply in the market, because what, there was a power movement of it at that particular point. Now if we should go backward again, we can see that we have another area of demand here. Here's another good area of demand. Here's another area of demand you can look for. This is it lower back here. So now when identifying these areas of supply and demand, as I already said, the time frame you use is really important, because if you go over to a different time frame right now, these areas might not be available for you. So know the time frames you trade and then identify them on that particular time frame. So I always advise identify them on the higher time frame and then look for your entry on the lower time frame. So now only look at the areas of power moves. So now let's take a look at this market again and see where we got power moves. So I'm not going to consider this place as a power move, because all these candle spikes really look suspicious. So I won't identify this particular point here. If I'm to identify anywhere here, I'm just going to get the whole of this point like this. Yeah, I'm just going to get the whole of this point like this. The reason I'm getting the whole of this point is that there's a huge market decision that can happen within this point here. So I'll be really cautious of this kind of place. And when I see this kind of movement in the market, whereby the market tends to really act somehow and then probably a news or something spike it up, I actually don't like trading those areas. I just give them some space until the market creates a normal movement before I look for my entry opportunities. So now let's assume that you've understood how you can actually identify them. As I already said, the time frame you trade determines where you identify them and how you are going to get them. So if I should go over to the 15-minute right now, if I say I want to identify on the 15 minutes, let me just reset my chart. Reset chart. So you can see that if I come back to the 15-minute right now, you see that my area of supply is no longer here, but it's over here. You see. So now the time frame you use is really important. So for me, I prefer identifying them on the 1 hour time frame, and then I wait for the market to pull into them. Now here's one thing you need to note. If you are trading this supply and demand, you really need a high level of patience. The reason why I say you need a high level of patience is that this market might take 3 days, 4 days, or 1 week before they trade back to these higher time frame areas. But if you are trading them on the lower time frame, no problem at all. You can easily get those pullbacks for you to get your entries. But if you are trading them on the higher time frame, just know that it's not going to happen within a day always. At times it's going to take you days, like up to even at times up to a week, for you to wait for the market to come back into those positions for you to trade. And the benefit of it is that whenever the market comes into this position, there is a high probability that you are going to make a decent profit of that movement. Yes, that is a honest fact here. There's a high probability that you are definitely going to make a good profit from that movement. So now looking at this market here, we also have another good area of supply here. Here's another area of supply where the market also made another powerful move to the downside. So I'm just going to mark it out as supply. So now we have all of these areas. So this is simply how you identify them. Just look at for the areas whereby the market make decisive move either to the upside or to the downside, and then mark them out. It's pretty much that simple. So now I'm assuming you've already marked out this part. Now let me show you how you can actually trade supply and demand levels profitably. So now let's talk about trading supply and demand levels using the same market right now. Now here's GBP USD. Now if I want to identify this thing, based on how I trade, first of all I'm going to go over to the daily time frame to check something. The reason why I'm going to the daily time frame, I want to see which side the market is recently bouncing to. And looking at up point from here, we have our all-time high here, and then we have our all-time low here. And we're looking at this recent market direction. We can see that the market is literally dancing to the upside with hopes of breaking out of this high here. So there's a hope for the market to actually break out of this point here. So I would say the market is dancing to the upside. So from this now, come over to the 4-hour time frame. So mainly the main direction of the market I'm going to respect when I'm doing most of these things is that I respect more of the 4-hour time frame, because I'm a day trader, I'm not swing trading. So what the 4-hour time frame shows is really important to me. So the first thing I advise you to do is that first of all, identify the market direction. Is the market going to the upside or is it going to the downside? If the market is going to the upside, you look for what? A buy opportunity. But if the market is going to the downside, you look for a sell opportunity. And in this case here, we have so many change of characters to the upside. If you look at here, we had a major change of character. Let me just mark out this point here. A change of character to the upside, another change of character to the upside. So this shows that the market is literally trading upward. So we can look for opportunity in this market until the market gets to the recent highest point. So for that, I'm going over to the 1-hour time frame. Now on the 1-hour time frame is where I'm literally going to identify my supply and demand level. So I'm not going to identify this one again. Like this old one is no longer valid to me again, but I'll be focusing on this particular one here. The reason is that the market has already come back here and then is pushing back upward. So I'm just going to watch out for this particular this new one the market has created. But one thing I always do is that I always like marking out the last lowest week in the market like this. The reason I do this is that whenever the market comes back to my area of demand here, I'm always cautious to see if the market is going to retest here before I get in. So because I'm not an aggressive trader, I trade based on confirmation. Until I get my confirmations, I don't enter the market. So this area here is going to be my area of demand. So I'm just going to mark it out. So now here's how I'm literally trading the area of demands in the market. And I'm going to get this one out. And then another thing I'm going to do is that I'm going to keep a line here. I'll keep a line here because I only focus more on the major areas. So the minor area, I just keep lines there, and then I draw my marks on the measures. The reason I draw my lines on the major is that I only focus more on the majors because the majors are way stronger than the minor. So for that, I'm just going to keep this like this, and now I'll wait for the market to either pull into here or pull to this upside. So let's see what the market does from here. So now let me just fasten it up a little bit. Now you can see the market came in here and then bounced back to the upside immediately. So there's still no panic yet. We are still observing the whole market movement. So now let's see what the market does from here. So now there's not always a guarantee that the market is going to come back into this point. There's nothing like that. The market might not come back here again. But one thing is for sure is that if the market doesn't come back, you look for another opportunity whilst the market is moving. You are always in the hunt to look for opportunities whenever the market is moving. So always keep this in mind. So I'm still going to mark this one here. So I'll just mark it like this. While the market is moving, look for opportunities because yes, okay. You can see that the market later came back into it. Now let's see how many days it took this market to come back into this particular point. So we mark it while the market was around somewhere here, I guess. Now let's mark it till the market came back here. So it took the market about 3 days and let me just say 4 days for the market to come back into it. Now on the 1 hour time frame, we can see that the market has come back into it. So we are looking for our entry opportunity now. So now what I'm going to do is I'm going to go over to the 15-minute time frame at this point. Now on the 15-minute time frame, I'm not going to look at this old side again, but I'll just adjust it over here. I'll adjust it to this point. Now let's see if the market pulls back here. If the market pulls back here and it gives us a rejection, then we are going to look for an opportunity to actually buy the market. So I'm going to go over to the 1 hour time frame again. Let's wait for that 30-minute pullback into that area. So I'm just that 15-minute pullback. Let's see if we get it. 1 minute. Okay. So we did not get it. But since we did not get it, what did we see? Consider the market tapped into the higher one. So since we did not get this one, now the market has tapped into this one, so we could be looking for opportunity over here because that's an area of supply. So now let's see over here. So over here now, if this market comes below here, then we can be looking to enter. So this one was a good opportunity for those of you who are fond of placing limit orders at areas of demand. If you had a limit order here before, you would have made a decent profit. But for those of you who don't like using limit orders like me, you probably missed this one because I did not get my retracement on the 15 minutes. So I always wait for that 15-minute retracement before I look for my entry. If I don't get it, I'm likely to let the position go. So over here now, let's see what this market does from here. If this market breaks below this line I have here, I'm going to look for a sell opportunity. So now let's see what happens. Okay. So you can see that after a long period of waiting, you can see that the market later fell back in here. Now this is one thing a lot of beginners don't know, and this is one reason why I hate limit orders. If I had used a limit order at this area to place a sell order before, my stop loss would have been tapped out. That's why I don't like using limit orders. No matter how I trust this zone, I don't like using limit orders, because this sort of fake outs are likely to get you out of the market. So because if I'm entering this market here right now, let me get my sell position taker. My sell position will be here with my stop loss just a bit above here, and then I'm going to be aiming for my take profit at these other zones. So now this is how I'm likely to mark at it. That's why I don't like using limit orders, because limit order, now if I had placed a limit order here before, the market tap me in and then tap at my stop loss before coming back into my position. Now here is the reason I don't like using limit orders. You can see the market move so and suddenly break out of here, and then so if I had used a limit order, so let me say I missed this area here because I did not use limit order, so I wanted to catch this one here. So if I had placed a limit sell order here before, let me delete that off. Let me say if I had a sell limit at this point before, my stop loss is definitely going to be just some pips above the supply level, and then my take profit will be down here. And you can see that my stop loss would have been triggered before the market fall back. This is the reason why I mainly don't advise using limit orders when trading this sort of when trading supply and demand. Always wait for the market to bounce into that area and then set your alarm. Once the alarm gets triggered, you come and check it to see if the market is giving you good reason to enter. If it doesn't give you that retracement, then you don't take it. So for example here now, since the market has created this new high, I'll wait for the market to pull back into it before I'm going to get my sell entry. So let me just lower it to 1s. Okay, let's see if we get a retracement back into it. So let me just fasten it up a little bit. Okay, here we've gotten the retracement into it. Now that we've gotten, I'm going over to the 50-minute time frame to go look for a change of character to the downside. So we've gotten it over here. So now we need a change of character to the downside to show that the market is still going to go to the downside. Remember, we had a good pattern here. So now let's see what the market does from here. If it's still going to push down a little bit more. Okay. Okay, so now here is it. We've gotten into the downside. You can see that the market has tapped at this area here. You can see this minor area here on the 50 minutes has been tapped out. This one has been tapped out, and at the same time the market stretched over to this old area as well. So now what I'm going to do is I'm going over to the 1 hour time frame. So now I'm back on the 1 hour time frame. So I'm going to set our limit order now. Now the reason why I'll be confident in setting my limit order is that the market has tapped at this other area that it created. You remember the 50-minute time frame? The market tapped at this other low here. That means that what? There's a probability that it's going to move to the downside. So with this in mind now, my limit order will be below this particular point. So let me just go set it. So to set my limit order, I'll just place it below here as well. Now this way I'm confident setting a limit order, my stop loss there, then my take profit way down below here. So now I'll just extend my stop loss a little bit for more safety reasons. So a 1:2 is not too bad because I can still extend my take profit to this lower side. Now let's see what actually happens here. Let me just bring it below. Yeah, so I'll keep my entry position like this. So now when I set my take profit like this, doesn't mean I'm waiting for the trade to come and hit my take profit, not at all. Once I get about 50 pips, or I get a profit that will cover up for my stop loss position, I'll take partial profit, and I'll make sure that partial profit can cover up for some part of my loss. So once I have it like that, then I'll just minimize my loss and then take that partial profit, and then I'll leave the rest to run through, to make sure that even if the market comes to hit my stop loss, it's either I'm not losing anything or I'm losing something tiny. So I always do that for safety reason, because the most important thing in trading is being able to save your capital. Is very important. So from here now, I'm just going to let the market play out. Okay, we got tapping, the market moved against us, and you can see this reason I always give room to my stop loss position. So you can see how when I was setting my stop loss position, I was literally looking at this final candle here. You can see the market came back to tap at whatever liquidity that was stored at that area, and then before pushing downwards again. So this is the reason why whenever I'm entering the market, I'm taking any position, I always make sure that my stop loss is some pips above this last high. And you can see where the market ended, just few pips away from it, but then it saved us. So now let's look at where the market is right now. So from here, let's see how many pips. So this is about 68 pips. So with this 68 pips right now, I'm taking partial profit, and my stop loss automatically comes to my entry. Yeah, I'll take partial profit and my stop loss, everything get reduced. I reduce them. So let's see what happens from here. So let's see if the TP got smashed or the SL. Let's see which of them gets smashed first. You see, that is it, the stop loss gets smashed. That's why I don't wait for take profit to hit. Whenever I'm in a good profit position, I'll take partial profit, and then I'll take my stop loss to my entry position. So if the market comes back, let it tap me out. Whatever thing I've taken, I have something over there, and let the rest burn out. That's simply how I do my trade. So this is simply how I trade my supply and demand levels. Very much simple. I wait for the market to go into the demand or supply area. I go back to the 15-minute, look for a change of character, and I put my limit order some pips below the change of character, and then keep my stop loss above the previous high, and then I just do it like that. And once I get into a decent profit, I take partial profit, and then let the rest run go. So in case the market comes back, it's either I'm not losing something much, or I'm not even losing at all. That is simply how I trade my supply and demand level. Nothing complicated. So regardless of the strategy you are trading, this can actually help you more. Remember, when identifying your supply and demand level, your time frame matters. I trade a 15-minute more, so I identify my areas on the 1 hour time frame. And apart from that, also keep eye on fundamental, because fundamentals can easily break above. Like what this market did here is purely a fundamental influence. This place here is a fundamental influence. You can see this one here is a news influence. So does this other candle here is also a news influence as well. That I see the market after all these bands, it will start selling off again. So if I should keep playing this one, you can see it will still sell off again, because what the market was originally moving downwards before the news came to create all of these candles. So the market will always come back down again. So now that is simply all I have to say for you. This is simply how you identify supply and demand levels. Identify them on a time frame that you think you are convenient with. So if you are looking for your entries on the 15 minutes, then identify them on the 1 hour time frame. Look for your change of character and entry pattern on the 15-minute time frame. So for me, change of character is my entry pattern, so I look for it on the 15-minute time frame. Change of character or any sort of candlestick rejection, that is my entry pattern, so I look for it on the 15-minute time frame. And always keep eye on the news as well. As I already said, the news is very important, so always keep your eye on it. So with that already said, I hope you find this video helpful. Don't forget to smash on that subscribe button, like this video, and tell me what you feel down in the comment section as well. So now you can see that the market came back and tapped at this old low, but then ended at this other low here. You can see we also had another low here. So this market is still likely to go back upward or break further down below. So that is totally what depends on the market. So it's going down below. So now this is simply all I have for you in this video. As you can see, supply and demand levels are pretty much very easy to identify. Once you identify them, use whatever thing you use as your entry pattern on a regular basis. Use it to identify your entry patterns, and then you are good to go. And one thing to know is that it will not play out always, but out of 10 positions you take, there's a higher probability that 7 of them will play out, provided you follow the advice in this video. So that I said, have a nice day. Bye.